Hi guys, it's Rob here from Property Developer Network. We're coming to you for another Ask Rob Anything, and today we have Rajeev. Rajev's got a bit of a curly question that he's going to be asking me. Now, our Ask Rob Anything series is available to any of our annual members, so simply submit an application form, fill in the question, and book a call, and you too can be famous just like Rajeev. So, Rajeev, why don't you give us a little bit of an overview about your current problem and what it is that we need to help you with?
Yes, of course, Rob. So the current problem I'm talking about is dealing with builders once you have already got a contract and the construction happening. So the problem I'm dealing with is basically I'm trying to work out with a builder who is already well inside a contract and he has started the construction. We are at it was a 10-month construction and we are already in its 9th month, and the builder has kind of gone in a financial conundrum in which he's trying to figure out what requires to happen with him. He hasn't gone bankrupt yet, but it has put me in a position that neither we are in nor we are out. We are awaiting for the builder to kind of sort out his things, but we are running very late on the project at this stage.
Okay, so good background with your situation. So thank you, mate. I anticipate there's a few challenges that you've got in and around that. So I might ask you some questions and then see if I can give you some good guidance as we go. So firstly, do you have a liquid damages clause? And if so, how much is actually in that?
Yes, I have. We did make sure that we have ample to cover the purchase and the construction cost in an interest per month. So basically, it's around 2 million construction. So it costs around $8,000 in our interest only payments during the phase of the construction, and we have got that in our building liquidation clause. Yes.
Okay, so I guess for your benefit and for everyone else listening, liquidated damages is a penalty clause that sits within a contract that if the builder runs late, basically charges the builder, I guess, a penalty fee for, I guess, the fact that they are running late. Now, something to be aware of with regards to this is you don't actually receive that as cash, but rather it gets discounted off the construction price. They also have opportunities to defend what it is that they're running late for. For example, if you put extensions in, if there were rain days, a number of things like that. So I guess whilst you may think that the clock is starting day one, you need to have kept a very good record of this is the rain day that got caused, and this is also when I asked for a variation of the contract, and when they responded, did they indicate that that was going to cause any extensions in their time, et cetera, et cetera. So hopefully that helps in that regard. That can create some cash flow challenges because you're funding the holding of that. So some guidance that I would give you in this regard, mate, is make sure you talk to the local building authority. So you are in Victoria. So I believe that is vba.vic.gov.au. So I guess they can give you some guidance on the process, what you can and can't do along the way. The challenge that, and without knowing the personal circumstance of the project, the challenge that I see is it's providing all the symptoms of the fact that the builder is going broke. Now, they may not be broke yet, but it's one of those things where you tend to see the early signs when, you know, construction on site starts to slow down because they can't pay their subcontractors. And because of that, then the subcontractors don't want to turn up because they're owed money. What that means is if you've paid any money towards your project, it may not necessarily have gone to the subcontractors. So there may be subcontractors currently sitting there right now who've done work and are owed money. You've paid your part to the builder, but the builder has not passed that on to them. And so they're feeling disgruntled and not wanting to actually be on site. That can cause a couple of problems for a few reasons. One, they don't want to come back until they're paid. And two, many of those subcontractors are actually responsible for particular parts of the sign-off. So your plumber will be required for your plumbing certificate. Your framer will be required for your framing certificate. They're not going to issue those certificates for completion of those stages unless and until they are paid. So even if you want to get another builder in, without those certificates, the other builder may be forced to either A, pull down the work that's been done and redo it themselves, which is, you know, not a good outcome, or B, you may be in a situation where you have to go and pay those subcontractors yourself personally in order to get the certificates. Now, for that reason, every time I go into a contract, I always have a special condition in that contract that says I will only pay the appropriate claim when you have demonstrated to me that that completion certificate is in place. So you need to provide me the completion certificate, then I'll pay. So that avoids that challenge in the future. So next building contract you go in, make sure you put a special condition clause like that in. That will mean no problem if you need another builder to come in and take over. Okay.
Yeah.
The challenge you've got right now is you're kind of stuck in limbo until the contract technically expires and they are technically in breach. And it's a difficult one because you know that it's going to happen and you know that it's inevitable. I would be very much seeking legal advice on what clauses that you believe you can actually terminate them under. Make sure that you follow the appropriate process with notifications and things like that. It is highly likely that they will challenge that because you know, they will be trying to claw onto any possible income stream humanly possible. So they will make it very difficult to terminate. Talk to the local building authority and put on notice the fact that you believe the builder is broke, and that and are there any internal mechanisms that they've got in-house that they may be able to trigger in order to do this. Where it gets really tricky is for most jurisdictions, and I have to admit to not knowing the Victoria jurisdiction to an intimate detail, but with most jurisdictions, there is a very distinct difference between a residential building contract and a commercial building contract. So a residential building contract is you, the homeowner, building a single home, and that builder building a single home. Now, in that instance, you would actually have a homeowner's warranty insurance that protects you during the entire construction and upon completion. Now, when you're, I guess, doing this in a more commercial nature, which you are as a property developer, then there's a threshold that says, well, if you're doing X amount of houses or X amount of properties in the one contract, it is now deemed a commercial contract, not a residential. And therefore, you don't get the protection of that homeowner's warranty insurance during the build process. Now, I anticipate, I think you said you're doing 4 townhouses? Okay, yep. So I anticipate that in Victoria, you've probably breached that threshold and you're into commercial, I guess, commercial build contract territory, meaning that that homeowner's warranty insurance won't protect you during the construct.
Yep. So sorry if I can ask, we have an insurance, homeowner insurance, but I thought that would only come in play once the builder gets bankrupt.
So if you've sought out a separate construction insurance from a dedicated insurance provider, that may protect you. Okay. Now, is that what you're referring to?
No, this is the HIA insurance that the builder has to take before he starts the construction.
Okay, so that insurance is the one I was just referencing.
Yes.
If you are doing a single build, yes, you would have been protected. But when you get over a certain number of dwellings, its intention is not to protect you as the developer. its intention is to protect the ultimate owner of the property that's going to own that property for years and years, well after you're gone. So that's the intention of that insurance. So you're paying that insurance premium on behalf of the ultimate owner. Now, I don't know what that threshold is, but I suspect in Victoria that as soon as you build 3, you then, I guess, exclude yourself from being protected along the way. So, which then means you could have or should have put your own construction insurance in place, which is typically quite expensive in order to implement. It sounds like in this instance, you've not done that extra step. Okay. I would be talking to your solicitor about, hey, you know, am I protected under this homeowner's warranty insurance? My assumption would be, no, you're not. But if you are, also talk to, I guess, the Victorian Building Authority and actually ask them the same question and ask how you actually make a claim. Now, if you're protected, then they would make a determination as to whether or not the builder was in breach and whether or not a alternate builder would be substituted in under the insurance policy. My suspicion is that won't actually be the case here. So tricky times, mate. It's a little bit of a minefield to navigate, to be brutally honest. I can speak from personal experience having a builder that I had to manage through to the end. So those early symptoms came up very early in the process. My guidance is that's probably what you need to do here as well, is actually manage the builder through. Sit down, have a face-to-face meeting with him and go, look, it's not in your best interest to go broke. It's not in my best interest to go broke. How do we do this in a way that gets my project complete, keeps cash flow coming in your door, but I need to make sure that those subbies are actually paid, because without those subbies paid, I don't get my completion certificates. So, you know, you need to sit down and have that hard chat with him and go, well, I can cash flow the rest of the deal, but I need to know that it's actually happening. The alternative is you need to go hard legally and actually get them out of there. And when you're this far into the project, it's kind of the devil in the deep blue sea. No matter which way you go, it's going to be pain, and you've got to work out which is going to be less pain than the other. You know, if you have to kick them out, 1, it's expensive. 2, it takes time. 3, the incoming builder will have issues and challenges with regards to taking over somebody else's work. They'll generally charge a little bit more to complete the project. So, you know, that is not a nice path. Staying with the current builder is equally not a nice path. You have to manage them, you have to cash flow them, you have to, you know, make sure that they're physically turning up to site. So you're effectively going to have to project manage your builder. So I wish I could say, do this. All I can really say is beware of this. I think all the things that you are doing already, so you're talking to a solicitor, fantastic, do that. Talk to the Victorian Building Authority as well. I don't think you're doing that yet, but I would actually make sure that you are doing that. Put the builder on notice through the VBA and, you know, advise the VBA, look, I think they're going broke. They're underperforming on this project. You know, am I actually protected under my homeowner's warranty insurance? Yes, no. And see if you can try and find that position on that before the contract expires. Once you're into liquidated damages territory, it becomes this, it's a stick when the building, when the builder is actually performing well, it's a stick to make them hurry up, okay? So that they don't actually miss out on some of their profit. In a situation like this, though, the stick is actually too big a stick, because now there's no incentive for the builder to finish, because he's going to drag on. The more it drags on, the less money he gets. Why would he bother, right? So you may need to consider and make sure you do this with your legal advice, and also make sure that you look at your numbers in your financial feasibility. But you may need to consider waiving a portion of that liquidated damages clause in order to incentivize the builder to complete.
Right.
Now, it sounds very counterintuitive, but if
Yes.
if he has no motivation to get out of bed and go do your work, why would he bother? You've just disappeared there for a moment. Oh, you're back.
Yep.
That's all good.
Yep. So I'll just get the power on the thing. Yep. Keep going.
So that as I said, that will sound counterintuitive, mate. But the challenge if you don't do that will be that let's just say there's $10,000 worth of profit still left in the deal because he's running late. If you're taking $800 a week out of him in that process, that's going to very quickly chew that up, and there's nothing left for him to actually perform. So you need to, knowing that he's going broke, making him more broke doesn't serve you well, right?
Right. Yes.
Trying to, what can you do to cash flow him to get to the end of your project? If he goes broke after your project, you can't control that. But what can you do to minimize your hemorrhaging and minimize the impact on your project? Remember, you've got holding costs, and you've also got opportunity cost, and you've also got the fact that we're coming into a sliding market where the price of the properties are going down. So, you might have a win by beating the builder up, but you're having a lose because the property market's gone down.
Going down. Yes.
So it's this, weigh up your pros and cons and say, if I pay, even if I pay a little bit to the subcontractors just to get them back on the job, to pick up the shortfall of the builder, you may potentially eliminate the fact that the property market's going to drop another 10, 15% in the next 12 months or so. So weigh all of those up, mate. So
Yep.
hopefully that helps. And
that's very valuable. That's very valuable information. The long stick thing, you actually have hit the nail. That's because initially I was saying we are covering all our bases in the dollars, but the stick does matter, right? If at all you drag him crazy that he's not getting his profit, it makes sense though.
All good. Okay, well, hopefully that's helped you. Hopefully that's helped our audience. Once again, this is Ask Rob Anything. If you are an annual member, click on the links below and you can ask your question, and I'll do my best to try and help you out and point you in the right direction. Until then, folks, bye for now.
Thanks, Rob.